Trends of Middle East Tissue Market. Part 3. The Middle East. Case study of Turkey, Saudi Arabia, United Arab Emirates and Iran. United Arab Emirates, UAE. UAE was formed by the merger of 6 countries in 1971 and a new one joined in 1 year later. The country's economy relies heavily on oil export. Thanks to rich oil reserves, UAE per capita GDP is on par with those of leading Western European nations. In 2017, its population was 9.4 million, with a per capita GDP at $68,200. The country has the highest per capita tissue consumption in Middle East. According to industry statistics released at Paper Arabia 2015, the per capita tissue consumption in UAE in 2014 is estimated at 13.8 kg, compared with 24 kg in the USA, 18 kg in Western Europe and 4.5 kg in China. The UAE tissue industry growth is the fastest in the region, reaching a market valued at $2.3 billion. And its tissue market is still growing fast. Tissue consumption growth remains at 15% in UAE in 2016 despite an economy hit by a fall in oil prices. Thanks to the fact that friendly business policies, along with the influx of workers and go green policies, the level of growth has been maintained. More growth is expected here as we see an increase in tourists arriving in the country. In particular, the hotel and restaurants segment is constantly growing at a very stable pace. A large portion of UAE tissue paper consumption is for facial tissue, especially boxed tissue. In fact, UAE has the highest per capita box tissue consumption rate in the region. In the Middle East, UAE ranks 5th in terms of towel and tissue production, with 14% share of the total capacity. There are 4 operating tissue mills in this country clustered around Abu Dhabi that have a collective production of 130,000 tons. 3 out of the 4 use virgin pulp while the rest 1 uses recycled fibers as well. Nukil is the biggest tissue producer in the country, taking over 30% market share. Kimberly-Clark Corp and Alipose Group were the 2nd and 3rd respectively. Iran. Iran is the 2nd largest economy in the Middle East after Saudi Arabia, with an estimated GDP in 2015 of $393 billion. It also has the 2nd largest population of the region after Egypt. Iran ranks 2nd in the world in natural gas reserves and 4th in proven crude oil reserves. Oil accounts for about 80% of Iranian exports, so the economy is very vulnerable and dependent on oil prices. Iran was sanctioned due to its nuclear policy from 2003 to 2015, both the oil export and economy heavily impacted. The country reached a nuclear treaty with the UN in 2015, but following US pulling off from the deal in 2018, strict sanction by the US resumed, dealing a heavy blow to the economy again. In 2012 and 2013, Iran's economy contracted by 6.6% and 1.9%, affected by serious Western sanctions and oil export problems. The average 5-year economic growth was only 0.8% per year between 2008 to 2013. In 2014 and 2015, there was some recovery, but as new sanction imposed, the economy stumbled again. However, Iran tissue traders are clever for finding ways to operate even under sanction. In 2013, a large tissue mill was started up by Hayat Kaima in Iran, easing the tight tissue supply situation. Iran is in the midst of a moderate population boom, growing at a rate of 1.2% to 1.3% per year, contributing to the demand for tissue. By 2015, Iran has a population of about 80 million, but per capita consumption of tissue continues to be low at only about 2 kilograms. There is still a lot of potential to grow. Iran's tissue consumption grew at an average rate of 6.7% per year in 1995 to 2005, more than domestic production, which was 3.8% per year, and imports of tissue, mainly parent renals, began to grow from the late 1990s onward. From 2005 to 2015, the tissue production growth rate doubled to more than 13% per year, and the market volume almost doubled between 2010 and 2015. Facial tissues continues to see positive growth in Iran, increasing by 5% in volume terms in 2015. Boxed facial tissues continues to account for the bulk of this category, at around 98%. Meanwhile, kitchen towels and napkins sector registered the fastest volume growth in 2015, at 7% and 9% respectively. Toilet paper also experienced healthy volume growth, reaching 6%. With its about 160,000 tons of annual tissue consumption, Iran is now the third largest market in the Middle East, only next to Turkey and Saudi Arabia. Similarly to other Islamic countries, facial tissue is the dominating tissue segment, accounting for about 63% of total consumption. Toilet paper is the second largest tissue product segment with a share of approximately 30% of consumption. Towel has begun to develop only recently, mainly kitchen towels, while away-from-home towel is still in the starting blocks. Napkins are also a tiny segment, as facial tissue is used as a kind of all-around tissue by households. Traditionally, the Iranian tissue market had been dominated by independent tissue converters, some of which had grown rather large, such as Pars Crepe, Pars Cellulose and Zareen Barge Persia. However, new investments have changed the structure of the Iranian tissue market. For example, the Hayat Kayma Group of Turkey has expanded to Iran in 2011 and built a large tissue mill in Zimchan northwest of Tehran in 2013, making it the largest tissue supplier in the country in terms of capacity. At the end of 2015, Hayat and Zareen Barge Persia each account for slightly more than 29% of the Iranian tissue paper capacity, followed by Azerbaijan Arna Paper Industries 12%. Latif Paper Products and Golden Pars Industrial about 9% each. Price and availability continues to play a crucial role in purchasing decisions. Leading companies depend upon its long-standing presence in the country and in-store promotional activities to drive higher volume growth.